Hello, welcome back to another episode of Mortgage Tech Talks. Today I talk to Bekim Merdita from Rocket Canada. This was a cool podcast because we actually did back-to-back podcasts. So I actually did an episode on his podcast, Lending Thoughts. You're going to want to check that one out. Heard a lot of great things about it, and I just did an episode with them. On this episode of Mortgage Tech Talks, we talk about a lot of great things. We talk about his journey from a 4-person team for Rocket Canada to now his goal of being a 400-person team, the differences between the two. His new venture, Rocket Canada's new venture of being a lender, really a difference between a lender and a broker. We also talked about he spent a lot of time in the US, the differences between technology in Canada and in the US and why those gaps exist. And finally, some of the things he's doing specifically to address those gaps. It's a cool conversation, and we'll see you on the other side. Truth maybe is that every time you put a document in an email, that is the most vulnerable place. Hello, everyone. Welcome back to another episode of Mortgage Tech Talks. Bekim, great to have you here. How are you?
I'm doing great. Thanks for having me, Tom.
Yeah. Well, let's get right into it. For all those listening, we just actually got off an hour on Bekim's podcast of Lending Thoughts. It was great. I was the guest. I gave some amazing answers. So you're going to want to check that out. And now it's my chance to grill him. So I've been waiting an hour for this. So here we go. But maybe to start, I did a bit of research, and it seems that you spent a good amount of time really as a producer, kind of in the trenches, so to speak. And it seems that you had a lot of success in those trenches. And well, yeah, I guess maybe just to start, maybe speak a little bit to that success, or some of those keys, and then to put the tech spin on it. Was there any tech maybe that you used specifically, or, the company that you were with really used the kind of, I'm always looking for that unfair advantage, right? That's always something that they say, okay, well, if you're going to market, you want to try, how are you unfairly better than everybody else? So did you have that unfair advantage, or how did you think about that? So I guess 2 parts. Talked a bit about that success, and how did technology play into that?
So starting out, I was a mortgage banker, we call them in the States. That's where I started my career at Rocket Mortgage, then known as Quicken Loans, in 2012, and sort of like rose up through the ranks of the organization over that period. But then kind of started over as a producer in 2020 when we started this business. We were just too small to have a bunch of, management layers. So first thing I thought that we probably could and should do is just figure out what it's like to be an agent in Canada, and got my license and started talking to clients and figuring it out. I think, to answer your question in 2 ways, something that I think I excelled at was I was a really good communicator. Some of that was probably natural, but I think there was another component of it. I was just a student of the game. I had the advantage of growing up in that Rocket ecosystem, which was very training and development focused.
Is it? Okay.
Really get you to understand a lot around human behavior and why people make the decisions that they make. You'll hear things like, people make their decisions with emotion and then they justify them with logic. And so how do we understand our clients better such that we can make sure that they're willing to make that decision, which can be really emotional, especially around home ownership.
Yeah.
People need mortgages. Like, that's not going away. And who do they get their mortgage from? They get their mortgage from the people that they like and the people that they trust. And if they like and they trust you enough, then they're picking you over the hundreds or potentially thousands of other options that are available to them in the market. And one thing I always found interesting is that at the time, Rocket had hundreds of mortgage bankers in those days. They, I think, have something over 4,000 today. For example, but 2 people can be sitting in chairs right next to each other. Same leads, by the way. One person might write 1 mortgage for the whole month, and the person sitting next to them might do 30.
Yeah.
And it's like, how does that happen? They went through the same training and same everything. And what you often find is that one person is just deeply systematic and focuses all their attention on the communication. So what do I mean by that? I mean that they're going to look at the way that they run their business. They're going to systematize the whole thing. So CRM, going back to the CRM and the base layer of technology that one is using. And they're like, this is my process. This is the way I run my business. And once I've got that set up in a really, really good way, I'm going to spend no time worrying about that anymore. And I'm going to spend all my time on the way I speak to my clients. I want to spend as little time processing as possible. I want to spend all my time basically in marketing and sales, which I really think marketing and sales, they're fancy names for communication. I'm going to spend all my time in communication with other human beings, and that's going to lead me to success. And when I think about the technology that enables that, it's a great CRM. It's systematizing the whole thing. It's knowing when it should reach out to your clients on your behalf without you having to go and constantly press a button. Like if you look at your week and Thursday and Friday are your follow-up days, for example, and the other 3 days of the work week are the days where you can actually go work your business, well, you're going to get crushed by the person who can spend all 5 days or 6 days working on the front end of their business. And that multiplies across the year and across a tenure and makes a massive difference.
Too, right?
Yes.
Yeah, absolutely. Yeah. Yeah. I mean, in that simple example there, you just like, oh yeah, Thursday, Fridays, I follow up and whatever, just the last 2 days of the week, I kind of mail it anyways. But that's a 40% difference, right? Like that's massive, right? What wouldn't, any big business do for a 40% increase? And if it's just building a process, that's a huge part of it. So let me dig a bit. And some of the pushback I get, so I'm going to push back on you. I don't think it's fair pushback. I'm going to transfer it over to you anyways. I get here sometimes where it's like, yes, I know that trust and communication and building relationships is so important. And honestly, over time, that's just going to become more important. But if I try to do that at scale, or if I try to get a system to do it, it falls apart, right? I'm not able to, if I'm just sending out some, I don't know, I'll just use a simple example, some generic graphic of a birthday cake on their birthday. That's not the trust that I want to build. And so, you can use that example or not, but point being, how do you balance really good communication and connecting to someone as a person versus balance that against, the systems and being able to scale and do those 30 deals in a month versus the one deal in a month that other person would do? How do you think about those two things and the trade-offs between the two? Or is there even a trade-off? Is that the right way to frame it?
That's a great question. I don't know that there necessarily is a trade-off. I think the best people are doing both those things. I think what you're ultimately trying to do is elevate the human in the experience. And that's how I think about a great CRM or any great piece of technology. It's not the technology itself. When we describe ourselves, for instance, we always say that we are humans helping humans powered by technology. This is why we don't really identify ourselves as a technology company. We're truly trying to figure out the best methodology for helping more people. And I think that the less time, again, that you can spend on the technology and the less time you could spend systematizing, the better. So one thing I talk about often when people ask me about the mortgage business, or especially one like ours, which really started with 8 people, 4 of us being on the front lines, talking to clients, trying to figure it out, is not so much like creating a good 4-person mortgage business. I don't want to diminish that because it's hard enough of a task as it is to, put 4 people in a room and say, boom, mortgage business, go make a living for yourselves. That's really, really hard.
Yeah.
But even harder than that, I'll argue, is building that at scale and making that repeatable is so hard. So, I would often look to, my partners in this business and say, like, if we just wanted to have a 4-person team, I'm confident enough in my abilities and, the 3 people surrounding me here that like we can figure out how to create one of the best 4-person mortgage businesses that the world's ever seen. Could we create the best 400-person mortgage business that the world has ever seen? That's an infinitely more challenging issue. And the only way that you can really do that is by having some prescriptive part of your process that just says, this is the way that we take care of clients. This is how we act as advisors to our clients. And culturally, if you're going to be a part of this, there's just some things that you're going to need to accept that come along with being a part of this team. And it might not be the way that you want to run your business, and that's okay. But a couple things that are going to be clear with our team is like, we're going to have really good data. We are not going to cut any corners on applications. We are going to be really, really good to our lenders. And what that means to us as a brokerage is making sure that everything that we do is serving our lenders so that our lender can serve us, which ultimately then allows us to serve our consumers. all of that stuff gets systematized. All of that stuff gets put into CRMs and our POS. And then, we rolled out a lender in 2023 and have a lending product on the shelf as well, insured, uninsured today. And we have to think about that in terms of our own LOS as well. So like getting really good, systematic, clean, structured data from one party to the next party to the next party so that everybody can do a really great job.
Yeah.
That is how we, build something that's scalable, repeatable, and it's not reliant on, your eyes popping open at 3:00 in the morning saying, oh crap, I forgot to call somebody today. I better get on.
Late?
Yeah, it's too late. Like you should have a system that's feeding you alongside, telling you what you should do. And we try to make sure that like everything's built in the way that like client service never slips. And if we take care of our clients take care of us and they come back to us.
Yeah. Yeah. I think for a lot of people I talk to and a lot of people listening, I think a lot of them are at the 4 people in a room sort of thing, going back to your story. So they have a lot of confidence in that core team and they've had a lot of success, right? Especially past, early, 2021, 2022. And they've seen that success. And I think a lot of people, again, that I talk to are starting to look around and saying, okay, well, where do I go from here? And a lot of people we talk to is building their own tech system. Other people, maybe it's, I don't know, a lender, different things like that. But other people is just saying, hey, maybe going from a 4-person to a 400-person team. So talk to me about your mindset. Like, what's so different between 4 and 400? And is it so different that, you had to begin with the end in mind? Like if you just kind of started with a 4-person team and then you were doing your thing for 2-3 years and then you lifted your head up and said, okay, now it's time to go 400. Is it already too late? Like, do you need to be thinking about that 400, that goal in the future as you're building up the business already? Or how do you think about the differences between that 4 and 400 person team? And I guess what processes and systems and things need to be thought of at the business level to enable that transition?
So I think you said it perfectly, which is when you're thinking about building a 400 person team, you actually have to start with the end in mind.
You do. Yeah. Okay. Interesting. Yeah.
You may be able to start with Post-it notes. And as a 4-person team, you might be able to run your entire business off Post-it notes, frankly. And maybe, one little sheet in front of you that says, don't forget to call the Hall family back before you log out today, type of thing.
Yeah.
But when you start to look at things at scale, the difference between closing 3 mortgages per agent on average per month or 5 mortgages per agent on average per month is the difference between basically winning and losing in this business. And depending on your cost model and your pricing model and all those things, like it's extremely sensitive to the slightest deviations in your business, and achieving a specific layer of productivity at a specific, cost per acquisition at a specific rate discount per loan and like really nailing that model is something that you have to really understand it. Now, it doesn't mean that you start from the end and that all your assumptions are correct, because I can guarantee you every single business in this world, pretty much, I mean, unless you just nail it, which is like, extremely rare. And to anyone who's ever done that, like this is the idea, they get it right the first time, 0 pivots, and it just it just smooth sails. I haven't met them yet. I'm sure they exist out there somewhere.
Either. Yeah. If you find them, let me know. But
absolutely. I'll invest in their next venture. But for most people, it is really something where it's like you start with an idea, you start with a model, you start to, build a hypothesis for like how you're going to get there. And then you start really building the base layer with the end layer in mind. But what you'll find is that technology moves so fast. People move so fast. Your team changes so fast. When you're trying to scale, things are just coming at you in such a way that you can never predict the end. So what you're actually best in doing is having the most dynamic base layer of your business that solves for some of the biggest future problems that you have. And it's, it's one of the reasons that we've gotten the question many times in the past, but it's like, you're a part of Rocket, presumably you got some venture funding to start this thing. We started it as Edison Financial. And I think, people had a misconception that like, we just had $1 billion in the bank and we just had to like, go out and just build a business and everything would just solve for itself. Couldn't be further from the truth. In fact, very scrappy startup. It was like, just figure out if you can write and close mortgages, and then we'll keep going from there. And we really just had to like get in a room, be entrepreneurial about it, and just figure each thing out. But coming back to my point around technology and how that plays a factor, one thing I think we did really well was we set up our technology stack in a way that it's dynamic, primarily based around third-party systems with really good and tight third-party integrations from system to system to system to system. And why that's so necessary in our industry is I don't think there's anybody that has the entire value chain completely nailed, right? So Blue is a CRM provider, for instance. It's probably the right option for many, many people. It might not be the best option for 100% of mortgage agents.
I don't think
in
it would
the industry.
No. Yeah.
And by the way, that's okay.
Yeah.
You don't have to have 100% market share to be successful, as you've probably learned. And that's cool.
Yeah.
For some people, the next layer would be their POS system and what they're using to basically submit their applications and intake all their client data. A lot of them will manage their clients after the fact from there. But then you start going further along, and then there's the POS system. There's the way in which you order your appraisals. There's, if you want to build a client portal for servicing, and, what do you do with these clients who are on your books? Like, there's so many things. But if you can build it in such a way that as technology changes, you're not managing such a massive code base that doesn't allow you to move with the times, then I think you're setting yourself up to be more dynamic, move a heck of a lot faster as a business, not be as hyper specialized in terms of the type of developers you might need in future state. You'll find companies that, have been around for a long time, and they're like, hey, we're on a 30-year-old technology stack. And we have to keep these 40 people around for the business to keep running because they're the only ones who know how to fix it, right? It's like your uncle or your dad or something like that, who's like the only one at your house who knows how to fix this old leaking faucet. And they've got the trick, and every time you try
they know
it,
exactly where to hit the pipe to just,
oh, that's not a problem. They hit the pipe there every time, right? But it's you don't want to live in a world where you're reliant on something like that. You want to be as dynamic as possible, move as fast as possible. I think that's the advantage to a startup. That might be the only advantage that a startup has playing against people who have, trillions of dollars or billions of dollars worth of mortgages flowing through their systems.
Yeah, it's so right. And I think it's this debate I've had on this podcast many times, and one that a lot of brokers come to us with, which is this all-in-one versus the, many, a big toolkit where it's kind of best in breed for all of them. And, for us, Blue, we are very CRM focused. We are kind of, in our lane there. But I obviously get both sides too, right? I get the appeal. I'm not naive in that. But I think you're right. Being able to be dynamic is important today. And it seems like it was important for you to get from 4 to 400, or at least get on your journey there. But I think also, and we talked about this when we chatted, how it's just going to be that much more important going into the future. There will be just so many more tools. I think the cost of developing new tools is going down. So more tools, more things to use. And with these new tools, if let's say something comes out that just completely changes the game in terms of how you communicate with your clients or underwrite a deal or book a meeting or whatever it is, doesn't matter how big or small it is in the process. If something really kind of comes along and revolutionizes that, you want to be able to take advantage of that as quickly as possible. And so, using systems that are open and flexible that you can just, almost like a Lego brick, right? Just click it in and you're off, versus a big system that tries to do everything, and then you need to wait for that system to build it in. It's just a different paradigm, and that flexibility is so important. So maybe thinking about that flexibility, you can actually test this theory that I have, something I say all the time, and I think you're the perfect person to answer it. I always say to a lot of the broker clients that we work with, hey, one of the big advantages that you have is that you can move so quickly, right? Especially when you're comparing to lenders, especially let's talk about big lenders who are big organizations that have lots of steering committees and approvals and this and that. I always say, hey, a broker could pick up a brand new tool and use it very quickly and learn if it's a good thing or a bad thing for their business, and either plug it in or throw it out. Whereas maybe a lender doesn't have that advantage. Now, you being the perfect person, because I think you see both sides, both the broker and the lender side of things. So is my theory true? Or am I not fully validated in that assumption, that kind of that nimbleness that brokers have versus a lender? Or do you guys just maybe approach things different at your specific lender? How do you think about those differences between the two different, businesses and their ability to adopt new things?
Brokers are much more adaptable. Okay. They have the ability to flex much faster than a lender would.
Yeah.
It's a great question. And frankly, something that I don't even think I would have understood myself until we had gone through that journey on our own. And the real reason is that There are very few loan operating systems or LOSs. Not a huge acronym guy, but I feel like I've said a handful already. I hate acronyms, actually. I'm sorry for that to anyone listening. A loan operating system, which is just a fancy way to say the place where deals get underwritten and ultimately, placed with an aggregator and then maybe passed on to a servicer or serviced inside of that system. But the connections that you have to get in order to operationalize a lender, it takes a long time to stand that up. And there are very few of those players in the market today. Whereas with brokerage technology, you could basically take it as a standalone. I could just take your CRM, Tom, and the only place that I may have to plug it in, I probably don't even have to plug it in, but if I wanted to, I could plug it in to the POS, which is the point of sale system that we're using.
Say another acronym. Yeah, here we go.
So the way to think about that is like Finmo, Velocity, Filogix, whatever you want to use in that space. But I can just operate from that. I could just operate, from the CRM until I want to go and I want to like send the deal off into submission category, or I could connect the two and I can get a little bit more sophisticated with my business such that the two are speaking to each other. And you mentioned, open APIs, more acronyms, open connectivity.
What's API? God.
I actually know this one.
Yeah, okay.
Yeah.
Application Programming Interface. That's what it is. Okay.
Bingo. Thank you. In that world, like when you can connect systems to one another, then you start to make things a lot faster and smoother. The trouble is once those systems all get connected inside of a single ecosystem, and every single person inside of that ecosystem are players who I won't mention by name right now, but like they're the established players and they don't really, really need to win on a new technology stack. Like they've already won. They're already in market. There's tens of millions or hundreds of millions of dollars invested into the technology that they have. It works. They're profitable. They've got a monopoly or a duopoly or a triopoly. Why do they need to change? We already connected to your system. It's already working. We're already getting your deal flow. We're good to go.
Yeah.
You would literally have to go to every single person connected to that underwriting software to say, I need you all to be better so that I can be better. Or you have to vertically integrate to say, I'm going to do everything myself that everybody else does. Well, good luck. Now you're starting a mortgage insurer and an appraisal company. Yeah. You're becoming a bank because then you've got to be an aggregator and you need a capital markets desk and then you've got to service loans and things like that. If not, I've got to rely on all these pieces of technology connecting to one single system and then I've got to kind of live with it as it is.
So to put it a different way, it's not just a technology problem. Is that the way to put it? As you're saying that stuff, it's like, oh, is this a place for disruption, right? Is this something that could be disrupted? But at the end of the day, it seems that, well, yes, but it's not just tech disruption that you'd have to do. You'd have to do tech, but then X and then Y and then Z and then all these things to the point where any sane person would just say, forget it. I'll just do what everybody else is doing. Is that the right way to summarize it?
Yes, I'll give you a car analogy since we're based in Windsor, Ontario, which is known for its building of automobiles. And I'm originally from the other side of the river in Detroit, where assembly lines are right in my backyard. You can go and build a better engine, but it doesn't matter if you don't own the transmission. And I won't even give you the list. You get the idea. Every other piece of a vehicle, right? Yeah. You'd said to me previously, like, you had a background in consulting and engineering and that led into mortgage, but it's much the same. So like I can build one piece of it. It doesn't get me all the way there. And if I were to try to build every single piece of it to say, I'm going to pull the Tesla, right? I'm going to go build.
I'm going to rebuild the supply chain, which they did, right?
100%, right? But like they didn't start there, right? They didn't start there. And they sort of like took it in steps and then eventually got to that place. Well, how much capital would one need to basically kick every single other player out of the mortgage industry and basically say, here's the one-stop shop solution for the entire technology stack and flow of capital servicing, capital markets, loan management systems.
Right. I mean, you look at, the Tesla example and you say, okay, that was a lot of capital for sure. This would be a lot of capital for sure. But then you say, okay, well, in Tesla's case, if you're a free market guy, you say, okay, well, the amount of capital doesn't matter as much as the ROI on that capital, right? Is there a return on Tesla and there's a worldwide car market that goes along with it? Well, then there's a lot of capital that justifies that ROI. But for Canadian lending, that's a small market. And so how much capital can be justified given that ROI, right? And so, I think it's an interesting paradigm that we live in Canada, where I think there's, a lot of really smart people, building really cool tech, but we're kind of overshadowed by our big neighbors from the south. And it's something that's come up on this podcast a couple times for sure, to compare and contrast. And so you mentioned you spent some time in Detroit. I think you said actually you're originally from there, which is interesting. And let's go down that rabbit hole a bit, I guess, maybe from that tech lens, making that switch. It sounds like, you are a producer in the US, and then you said, hey, let's go do this thing in Canada. And you kind of went back to ground zero and had to rebuild things. Was there any kind of point along that rebuilding where they're like, hey, and then we'll just, plug in this thing? And then you were like, what? That doesn't exist in Canada? Like, how do you guys not have, X or Y or whatever? Were there any moments like that? Were there any, I guess the bigger question being, when you look at the two markets in terms of mortgage tech, are there really big differences? Are they more similar than you think? Or how do you think about the two?
I think about it every day.
Okay.
I love Canada for the fact that it is so ripe for innovation, but it's also the rub.
Yeah.
In that when you come from the outside and you see things being done in a way that you haven't seen them done in 10 years, you think you have all the answers to all the problems. It's not until you get really, really into the weeds of this business that you really start to understand why all these things don't simply exist in the Canadian market.
Oh, that's why, right? Yeah.
That's why. Like like, oh my gosh, don't they know that you can just automatically pull payroll and bank data?
Yeah.
You don't need to get pay stubs and bank statements anymore and ask clients to like provide all their T4s. It's regulatory. Yeah. And even if you pass the regulatory hurdle, well, none of the lenders accept these things as truths, despite them being like more truth, as we know in this industry, than, bank statements and things like that, some of which people can create on Word documents if they're willing to go that far and risk their license and career. But it is incredible. You see things like that every single day. And really, it took me some time. I'm still not immune, but it took me some time to stop accepting things at face value for just like, hey, they don't get it. They don't get it, right? Like, I've lived in Canada for 10 years, but we started this business in 2020. So I had been here for 6 years. I was still working for a US company. I was seeing the way that it was done. And it was actually part of that actually drove me to become a part of, the startup founding team at Edison Financial. Was I bought my own house here in Canada. I went through my own mortgage process.
Did you go through a broker?
I went through a broker.
Okay.
I went through a broker. I actually got denied by 2 banks because I wasn't yet a permanent resident or a citizen. And they'd said like, oh, sorry, we don't have any programs for you. So a friend of mine referred me to a broker. They're like, hey, can run down a solution for you. And sure enough, they actually found me a solution. That was what I got. Wise to the value of a great mortgage broker to plug our industry here. Yeah. I went through that process though, and I was just mind blown. I could not believe that they had, sent me a Word document saying, please answer in red to the following like 63 questions. And like seriously, black and white. And then I had to retype in red to all these Word documents, reattach it, and then send it back to the broker, who then like sent it off to the bank. And then I didn't hear anything for several weeks. I'm like, I'm trying to buy a house and this is really, really bad. I'm like, they do know that technology solves for all this, right? And turns out that, we know, but there's really good underlying reasons why these things aren't there. It's honestly a sad truth of our industry, but maybe to put a bow on that, I think it's also the most exciting thing about our industry. Definitely have a long way to go in terms of digital verification. Definitely have a long way to go in terms of document verification. We have a long way to go in terms of getting faster approvals. So I'll give you another little piece of technology that exists in the United States, which does not exist in Canada. Fannie Mae and Freddie Mac
I know those.
Have 2 tools. One's called DU, stayed on this acronym chain here that stands for Desktop Underwriter. And there's another one called LP, which is a Freddie Mac tool called Loan Prospector. And those are basically the Canadian equivalents to how we would think about CMHC, Sagen, Canada Guarantee, in that they say, hey, as long as the loan checks all the following boxes and meets this underwriting criteria, we'll agree to insure that mortgage. So you're effectively underwriting to their criteria such that you can sell that loan off in the secondary market. It's not exactly akin to Canada in that way, but the technology, when you think about it, what they do is they bring the approval forward. So it's just basically a piece of tech that you as the mortgage agent or broker can submit to. And right on the front end, it tells you whether or not that deal is approved or not approved.
Like how
if
quickly?
It's not approved,
how quickly?
What are some of the things that you need to fix in order to get it to an approved status? And what are the documents that are going to be required to get you not just a conditional approval, but the ultimate approval? Still subject to some underwriting in some cases, but it's pulled forward. I'm not wasting any time. I mean, we hear in our industry every day, like BDMs, send me the deal and let me take a look. Let me spend all this time, right? So you spend all this time now as the agent. I'm the underwriter. I'm going to spend all this time as the lender trying to figure out if I can make this thing work. When in reality, a single piece of technology could have just been provided to the mortgage agent and they just submit it. They get all the answers that they need right there. And then we're moving on with that deal and we're moving forward with that. Like, why doesn't that exist in our industry? Well, the answer is a lot of reasons, but
that's a whole nother podcast for the
I could go for days, but that is one of those beautiful things that, it exists in the United States, it exists in Australia, it does not yet exist in Canada, it exists in the UK, again, not in Canada. It's coming. It's coming.
I was going to ask you though, right, is that, we say there's a whole bunch of reasons. There's the regulatory, there's the technology, maybe there's the capital issues, right? Business investment, not enough people investing in Canada. There's the long laundry list.
Yes, and yes.
Yes. Is there one where it's like, if we could just solve this, so much of the other things we could maybe figure out? Is there one thing in your mind, or is it just, it's all those, it's a death by 1,000 cuts where it's 1, 2, 3, 4, 5, the whole list? Like, how do you kind of think of it?
That's a great question. It is death by 1,000 cuts to give you a very straight answer. If it was one thing, somebody entrepreneurial enough would go out and they would solve that one thing. We have an ism here, which is the inches we need are everywhere around us. The reason why we speak, and it's actually originally from Any Given Sunday, but it's like, if it were one thing, we would just go do that. But because it's 1,000 things, it's hard and it's harder, but it's also what makes it beautiful, because if you achieve that thing, it really makes it a lot harder to replicate as well.
Yeah. Yeah, exactly. Right. If it was just yards everywhere, everyone would be chunking those yards, but you win in the trenches, right? You win inch by inch. What was it? The 6 inches in front of you, that was the Al Pacino, right? Or what is it? You probably know better than me. So, well, anyways, I think that, in terms of, you talked about bringing the approval forward, getting that super quickly, and you talk about entrepreneurs coming along and trying to address some of this gap that exists. I'd obviously put you guys in that column of entrepreneurs trying to address that. And I think specifically, I see all over LinkedIn, under your lender specifically, you can correct me if I'm wrong on this, I think, but I'm seeing a lot of, hey, approved in 2 days. Hey, approved. I think I saw one recently, approved in 2 hours, like something really, really exceptional. So again, correct me if I got any of that wrong, but my question is, why'd you choose to lead with that? Why is that such a big part of your marketing? Does that come from your days and maybe your frustrations that you're describing? Is it just something that kind of is in your DNA of how you want to kind of exist as a lender? Talk to me a little bit about that, campaign and that idea of this very speedy approval process.
I think it came from 3 things. So the first is being a consumer myself, and our teams being consumers themselves. The second is actually going out and delivering on origination. So being in the mortgage seat, the mortgage agency, the mortgage broker seat. I think that's what makes this so cool, is like, we are not just, a lender. Some people might see that or hear that and get a little bit scared. And that wait, so you guys are a lender, so you're kind of my partner, but then you also have a brokerage too. So you work with clients directly. That's actually a tremendous advantage, because we actually know what agents and brokers go through. We've been through that. We are that. And Rocket in the US took much the same path to where they are today. And the third is just data on the clients and surveys that we've done.
So cool.
And it all came back to certainty.
Forms, like you'll do surveys of clients, like you'll go out and you'll ask them and say, what's your biggest pain point? Yeah. Interesting.
Absolutely. Yeah.
Very
thousands and thousands of, closed mortgages now give us significant amounts of data on what clients want. We go in there and then we build bar charts of why every client backed out during the process, or what clients are seeking from the mortgage process. And the overwhelming thing that we get back from a data perspective, the overwhelming thing that even we get from our internal team, and then even from being consumers and clients ourselves of our own homes and such, is the faster that you can give me certainty that my mortgage is approved and going to close, the better that it is. And if you can do that same day, if you could do that in the same minute, I would be delighted, because going back to even my own mortgage, Like that process took weeks.
Yeah.
I've got a signed contract on a home that I'm supposed to close on in 30 days. And I've wasted the first 2 weeks just waiting to get an answer back from you.
Yeah.
So now I'm like, think about all the ducks that are like getting in a row from like a life perspective to make a move happen 2 weeks out. And I can't get an answer. And I'm following up every 3 days saying like, so what do we think, guys? Like, am I getting this home or am I going to lose my deposit?
No kidding,
it's very stressful. So clients are just very, very clear in the data that they give us. They want certainty. So we talked about how do we give them that faster? And we started talking about this concept of hours, not days. Like, I don't want to wait days. I don't want to wait weeks or months. I want to know inside of hours. If I can order Uber Eats and I could track that vehicle as it's like picking up my food and then it's bringing it to my house, why can't I track my mortgage the same way? If I could track my pizza on Domino's,
yeah, that's Scott
pizza
Peckford.
tracker.
He always says the Domino's pizza tracker, right? It's
100%. But I'm doing $1 million transaction here, and and buying this property, and I've got a $700,000 mortgage on it, and I've got all this money at risk. But like nobody can tell me what's going on. That is terrifying. My family's, sitting over here waiting for a word. And I'm the one who's been talking to my mortgage person on the phone. So everyone like keeps asking me questions about like, so are we good or are we not good?
Yeah.
We need to deliver that experience for clients. We need to deliver that experience for agents and for brokers. And we need to deliver that experience across the industry. That is really what I think everybody's relying on us on. And it is not the great unlock, but I think it's one of the unlocks to actually helping more people become homeowners in Canada today. That's our big mission.
Yeah, I was talking to Dong Lee 2 weeks ago. He said uncertainty is actually the biggest stressor. It's actually not necessarily bad news. Like if you got in that situation, you waited 2 weeks, you had no idea. But if you got a no within an hour, that's actually maybe more helpful than nothing for 2 weeks, right? Like hopefully you don't get that no, right? But then and then you can do something. But it's it's that uncertainty.
It's a bit of an ugly way to compare it, but like, that's like kind of like the punch to the gut.
Yeah.
Where like it kind of like hurts in the moment, but you sort of like move on and you keep fighting. If you were to get like punched in the back of the head repeatedly over the course of like weeks, right? It's like, I know it can't be good, right? It can't be good. It's been going on so long. And that's what a mortgage starts to feel like. And agents all the time, they're like, oh, this client backed out on me. Well, like, how long did it take for you to give them certainty? Right. It's the first question I ask every single time. Like, not just the approval, but like actual certainty. We will close on this mortgage for you. If you can deliver that at the conditional approval stage, and then you can deliver it at the broker complete stage, and then you can deliver it at the lawyer's office, and then ultimately can have the keys. Each one of those, if you truly ask people how they're feeling, they will tell you that they're stressed to no end. A Zillow survey a few years back found that over 50% of consumers admitted to having cried during the home buying process due to stress.
So was it 50%, did you say?
Over 50% of people cry while they're trying to buy a home. This is supposed to be a phenomenal experience. We celebrate these things, right? All we ever see on social media is like the keys, and I got my keys and I'm so excited.
Sign.
We just became homeowners, right? The sold signs and everything else that gets highlighted in that world. But more than half those people were crying in the days leading up to that. They just didn't know that it was going to happen. Yeah. If we can solve for that, we solve for a lot.
Yeah, that's incredible. You don't see that. And no one's posting those crying. Well, some people do, but they're more the exception than the rule of the photos of them crying, right? But that's interesting. Maybe just to close out, I guess, I don't know if you have any quick things to add on the tech side, but I think also maybe to close, I think people will also be curious just to understand just the level of success that you're having. Obviously, I don't know how much you're able to share or not share, but obviously this lender venture is a new one. And I think a lot of people have their ears up about it. And I've seen, announcements, and I've been seeing new brokerages come online. I just saw you had Mortgage Wellness come online, and we know Nick well, and that's great. So congrats with that. How's it going? I mean, you have this hypothesis that this speed is so important and alleviating this uncertainty. Are you seeing that now? And being a data guy, are you kind of tracking, okay, we had this hypothesis. Is it right? Are we delivering on that?
We are getting feedback from brokers every single day telling us that they love it, or otherwise we wouldn't be doing it. Yeah. We also started with a pretty good and proven hypothesis from the US in that our Rocket Pro TPO business stateside has been focused on delivering a faster approval time and closing time for years now. And I was actually a part of that business before I came over here. So pretty well took my experience and said, this is what brokers want. And then we validated that with our own experience here in Canada. And turns out it's even slower here. So we know they want it even more. And yeah, we have great partners. You mentioned Mortgage Wellness and Bricks Mortgage being another one, and Tribe being another one, and HomeWise, like we just rolled out with them.
Oh, nice job. Yeah, great.
I think that's what's so cool about our industry. Like, people are so willing to partner up and connect because everyone wants the same thing, which is to deliver a better experience to consumers. So in our world, it's Salesforce, it's Finmo, it is Fundmore is our own operating system. Those things sort of like enable this experience that allows us to move faster and provide a better experience to brokers. But at the end of the day, those brokers are responsible for providing a better experience to their clients. So if they can give their clients what they want, which is certainty, and we can deliver that for them, they will continue to work with us. And the more that they give us their business, the more that we can invest back into our business. We grew this business from, just a couple of people in a war room to the 130 plus people that we have today, really just listening to consumers, listening to agents, saying, what do you need for us to make your business better and for us to deliver a better experience? And we just show up every day. So much so that I drive fast to the office because that's how much this mission excites me. That's how much fun we have doing it. It's not to say it's always super fun and exciting, but the mission is just so clear and obvious. And it's so important, I think, to Canadians. People want to own homes and they want to do so with a good level of certainty and comfort. And if we can provide that for consumers as a lender, especially, then that's how we enable our brokerage. That's how we enable other brokerages. And I think that's how we win.
That's a great place to wrap up. Thanks so much for coming on here. This was awesome. I know we pulled a double header here, but this was amazing. I really appreciate it. And yeah, we'll chat soon. How can people find you if they want to learn more?
Couple places. So my new podcast, which I'm having a lot of fun with here at Rocket, is Lending Thoughts. I'm on all social media platforms as well. Tom, hopefully you follow on there, but I try to stay pretty active. Probably best reached on LinkedIn. Just my first and last name, Bekim Merdita on LinkedIn is a popular place to follow me. I try to stay active. I schedule it into my calendar and try to do a decent job of just providing information about me, the business, and what I'm seeing in the world right now of mortgage and real estate. So follow me there.
Awesome. Thanks, Bekim. Have a good one.
Thank you.